Okay, so recording has started. So these are the futures which we trade and nothing else. It's the Australian dollar, British pound, Canadian dollar, euro, S&P, NASDAQ, Russell, Swiss franc, and Dow futures. They're the only ones we trade. And the reason we trade these is because besides the full-size contract, they also have micro-size contract, which is 1/10 the size. That is huge for us because you don't need a huge account to be able to swing trade futures. We do not day trade. We do not day trade. Oh yeah, we do not day trade. We're not sitting in front of a computer looking at 1-minute time frames, 100-tick time frames, 5-minute time. We don't do any of that. It's all daily charts, end of day data. And then when we place a trade, then we might see what's going on live in the market, but everything is done on daily charts, end of day analysis, with nothing moving. And that is something we evolved to. And I'm going to switch over briefly to a different, just 1 second. I'm going to change. So these are all we trade. I'm going to switch over to a new share. Central. Should be seeing a. So these are the futures which we trade. So we trade the index futures. Here are the margin requirements for some of these futures. Let's say we were trading the NASDAQ, we'd have to put up $14,700 to trade one contract. That's not how much you lose. That's not how much you make. That's just how much money you have to have in your account just to open one contract and to trade one contract. If you were trading two contracts, you would need $29,000 something to swing trade two contracts. Just minimum just to open two contracts. The big advantage is that we also have the micro version, which is 1/10 the size, $1,400 to open one contract. Okay, so that's the same thing with the NASDAQ and the Dow. Is 1/10 the size. The NASDAQ is $2,000 to trade one micro contract. If you were trading one full-size contract of the NASDAQ in Q, it's $22,000 just to open one contract. Two contracts, $44,000. So you see, you need really big accounts if you're going to swing trade the full size, but the micro lets many more people be able to participate in markets and with smaller accounts and be able to get the benefits of the bigger account. Is all percentage returns, not dollar wins and dollar losses, percentage returns, percent losses. Okay, so today I'm really going to focus on the currencies, which is really our bread and butter. The index futures are great for us, but the currency futures this goes back to 2006, 7, 8. This was our bread and butter. This is where we made our money, except for when we did something really stupid, which we'll talk about later on. Single worst trade ever, but that was like a turning point because it shouldn't have happened. All right, so Aussie dollar, $1,700 to trade one full-size contract. But if we go to the micro, it's $176 in margin to open one contract. Okay. If the full-size contract moves one tick, meaning 0.0001, if it moves 0.0001, that is $10. Okay. We'll keep that in mind when it comes up a little bit later on. If the micro moves 0.0001, that's $1. So every one tick is $1. So that makes the math really easy. We're going to be thinking about the micros for smaller accounts. This is great. I mean, if you have like a $5,000 account, you can trade all these strategies very comfortably. So you don't need a big account to be able to profit from the markets with a smaller account, trading the currency futures. That's why I love them. And the average win-loss percentage is somewhere in the upper 80s to low 90s percentage. So that's why it works really well for us. Okay, so now I'm going to go back to the chart. Along the way, ask any questions you want on anything. Don't think about raising your hand. Either unmute, ask a question, or type it into the chat window, and I'll see it there. Okay, so I'm going to switch back. We'll take a look at the strategy later on also, but I'm going to focus on the charts right now. Okay. What you're seeing here is a chart of the Australian dollar. Talked about digging a hole and for ourselves and being able to trade out of it. I want to go back to 2008 and show you the biggest hole. Myself and Becky, we both dug our own holes, and it was our own fault. We knew what we were doing, but we didn't follow our own rules, and the hole just kept getting deeper and deeper and deeper, and it was like, yeah, what do we do now type stuff. We're losing money. But okay, let's go back. I'm going to go back to 2008 and show you this trade and how the numbers all worked out. This was a time where if we had followed our rules, it could have been the best year of trading ever for us if we followed our own rules. All right. This was pretty much the top of the market of most markets in 2008 before everything just collapsed. During this time, myself and Becky, we were doing very nice swing trading with futures, bringing in really good money. I mean, really good money. So it was a type of money where we didn't need to have our professional 40-hour week jobs anymore. It was that type money. And we didn't really have losses. I mean, the way we traded, we were averaging 90-something% wins, and we could go like weeks to months and not see a loss. And that was working for us really, really, really well. So we're booking profits, booking profits, booking profits, booking profits, booking profits on futures. It's working for us. We did some options also, but it was mostly futures and for the big dollars, and we were trading options also. That was also working well. When the market dropped, options became annoying because you had to keep making adjustments. That's when we kind of transitioned to just futures. It was just easier to trade while making really good money. All right. So this was a very specific trade myself and Becky were both in, that we were doing everything right. We had our rules set. The rules aren't that much different than they are now. They're really not that much different. The trade management isn't really that much different. It was just that back then, we'd only been trading for a couple of years. So every once in a while, we would let ourselves slip on the discipline side, okay? It was still early in our trading. Every once in a while, we're making good money, we're trading, but we were making such good money, we had not experienced losses. We hadn't looked at the big picture of losses. We know we were taking in money. It was great. It was good times. But we were long the market, this Aussie dollar. This time we're trading the full-size contracts. So every tick is $10. We weren't trading micros. There were no micros to trade. It was all full-size contracts. All right. So we were all happy with trading this and other futures also, not just currencies. We're trading this and options. So as we get up to here, somewhere in this area, we got some sell signals. And up to now, we hadn't really taken a loss. We literally hadn't taken a loss. And if we're taking a loss here, given the size of the trades we were placing, it was going to be several $1,000s. And we're talking at least $5,000 to $7,000 would have been the loss on one trade, because we were trading fairly good sized trades. So it would have been a $5,000 to $7,000 loss if we had taken the loss. So, but we had not taken any losses before. We really didn't have many losses. So our mindset, we did the ultimate bad thing, which was, well, if the market is going up, it's just going to be a simple pullback like it's been. It'll go up, pull back, it'll go up, pull back, that type of thing. And so what we did, we moved our stop just a little bit. Okay, market was pulling back to our stop loss, and we moved the stop a little bit. Okay, we put it down like below a major moving average, where it usually will bounce off that moving average, but it didn't bounce. So then that would be like the 20-period moving average. So then we figured, okay, it always pulls back, it hits the 40-period moving average, and then it bounces. So we changed the stop loss again to the 40-period moving average. Then stop. Then the weekly time frame. Well, we look at a big picture weekly time frame. It's obviously is going to hit the weekly time frame and bounce the weekly move. It didn't stop at the weekly time frame. Okay. Remember I said it's $10 a tick? This is dropping. Okay. We had gotten to a point where we were down so many thousands of dollars due to lack of discipline, because we didn't want to take a loss of $5,000 to $7,000. We just didn't want to do it because we thought we could save that money by just moving the stop and it'll bounce. But then it kept going against us even more. It's a common story. Many traders, you'll hear the same story. And we were living it in real time. Right around this time is when we actually went to the Traders Expo in Las Vegas. We knew we had a problem here. Went to Traders Expo. I saw John Carter there, told him what we did. And John actually gave me a hedge to stop the bleeding until things could settle down and we get a bounce. He showed me how to place another trade on a different instrument, which could be a hedge for this a while. And I was like, cool, thank you, John Carter. But what had happened during this time, as volatility in the market increased, so did the margin on everything. The margins had gone up so much, there was literally no free cash left in my account to be able to place a new trade with a new position to hedge what was going on. Even though I learned something real fancy and cool from John how to do it, couldn't place the trade because all my free cash was now occupied with margin from open positions, because margins were doubling. So let's say I had in my account $10,000 free with just unutilized capital. All of a sudden, that $10,000 was tied up with margin from the other trades I had open. Margin was going up overnight, literally overnight. Margin was doubling on certain things. We were trading some Russell futures. Margin on Russell went from $4,500 per contract to $9,000 per contract overnight with no notice. Okay, literally, I knew a hedge to at least stop the bleeding, couldn't execute it. So now we're doling. It's like, what do we do? What do we do? Okay, up here, take a look at the pricing. 0.9700. Okay, every tick is $10. So if it's 0.9700 and it goes to 0.9701, that's plus $10. If it goes to 0.9699, that's minus $10. It went from 0.9700 to 0.8700. Okay. And then we thought it figures out briefly. We thought, okay, it's going to bounce now. It dropped 1,000 ticks. 1,000 times $10 is $10,000. That's just on one contract. This is what wiped us out right here. This move down, because we were in it when we shouldn't have been in it. We were looking for a bounce. We were so against taking a loss that we took the biggest loss we ever took. We both did it. We knew better. We both knew better. We didn't follow our own rules. We knew what the stop loss should have been. We moved it. If we had followed our own rules, This could have been and would have been one of the best trades ever for us. Okay. We've all done this. If you've been trading long enough, you have dug holes for yourself. You have made bad decisions. Once you do it and you realize you did it, don't do it again. Okay. The trade strategy we went over last time, and I'll take a look at it again today. It's the TNT 52 sell. This is a trigger line. It's a linear regression. It's a moving average of a linear regression line. Here's the setup. Price touches upper bowl. This is a Bollinger Band right here. Upper Bollinger Band only. I don't have the middle and lower line showing because we don't use them. Here's what could have happened if we did our thing right. We get a trade. We were in a trade long. We're moving our stop losses up, and we should have been stopped out somewhere around here. Is where we should have been stopped out. But we did, our worst case scenario, we would have been stopped out here. So we should have been stopped out either right here or right here, and we would have been out of the trade. That's when we should have taken a loss of the $5,000 to $7,000, whatever it would have been, and say, well, that sucked. Okay. TNT 52 sell, 100% objective way to draw trend lines. Okay. Boom. Boom. That's our sell signal. This is only about 88% win, somewhere there. When I get this sell signal, 100% objective way to draw. We've had a couple of these recently too. Here's my sell signal. This is and back then we were also trailing stop. We didn't just trade to the first target and get out. We were trailing stops. Instead of having minus 1,000 points, 1,000 ticks and blowing out of account, it could have been just the other way where we actually gained positive 1,000 ticks in a trailing stop, because as the price kept dropping, it never retraced up to hit our stop losses. At this point in time, we were using the parabolic saw as our trailing stop. After we get into a trade short, it never went back up, hit the first target, never went back up, it never went back up to stop us out. We could have booked another 900 to 1,000 ticks of profit on going down if we had just followed our rules, taken our loss when it should have happened, and then get into the next trade. But realistically, we would have been stopped out on this day. It's going up, 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 meaning our stop loss is somewhere right down here, and it would have been stopped out right there on this day. But we didn't take the stop. We were like, ah. So what happens? We didn't get stopped out. We changed our stop, moved it to somewhere down here, and then it went back up. We were like, yay, we made the right decision. It's going back up now. We made the right decision. It's going back up. Boom, wrong decision. Wrong decision. And this was the start of the really big wrong decision. Okay. Losses happen. But if you know you're trading a methodology where you have a statistical expectation of making money, then you have to have a big picture understanding of what's going on and not make this same type of mistake which we made, which we still remember. I know Becky doesn't want to talk about it, but she knows it. That's the one that's like, ugh, I don't even want to look at that one trade, because this was a turning point in our trade. This really was. This one trade, our turning point. From after this horrible incident with this trade, it just kept going. Literally, Aussie dollar dropped 40%, lost 40% of its value in a couple of months. It just kept going down and down and down. And we could have been in this trade with multiple sell signals, with all different strategies, but we wiped out our accounts. We had no money to trade with. Even if you make a mistake trading, it should only represent a certain small percentage of your account. If you're losing 10, 20, 30% of your account on a loss, you don't know what you're doing. I'll say it straightforward. You do not know. If you're losing 10, 20, 30, 40% of your account on one trade, then you are either intentionally gambling, hoping for the best, but that's not sustainable, because the reality is at some point in time, you will have 3, 4, 5 losses in a row. If you're betting 20% of your account on one trade, after you get 3, 4, 5 losses in a row, your account's wiped out. And that has happened to us in our learning and development in the early years. And probably to most people who in their early years learning, it's like you're gonna bet more than you should on one trade and just wipe out big chunks of your account. And so what our turning point was really going to the Traders Expo and meeting people who trade their own real money. The reality is we didn't learn to trade from all the different schools we went to. Myself and Becky would fly around the country to attend trading schools, different trading schools. We went everywhere from Seattle all the way to Orlando and Utah to attend trading schools. And at the time, they all sounded really good. But the reality is they would sell you their low price trading package in order to lure you into getting the more expensive package, because you soon realize you didn't have enough knowledge. The first group we went to, I won't say the name, but they no longer exist. We paid $3,000 for the training, and we took losses right away. We did loss after loss. It wasn't working. Red light was 3 green arrows, 3 red arrows. Y'all can figure out who that was if you know that 3 green arrow, 3 red arrow thing. It wasn't until later on we met up with one of the primary trainers from that organization who didn't work there anymore. And what he explained is what they would show you in the $3,000 program was just enough to lose all your money and make you come back and ask questions and make you sign up for the $20,000 package. The $20,000 package was theoretically where they showed you the real stuff to so they can actually really make money. That just annoyed the heck out of me. So going to the Traders Expo in Las Vegas, we met people who were trading their own real money, not trading schools. They might still charge you for some training, but it was a different situation where you are learning from people who are showing you how they trade their own real capital. In some cases, like a John Carter, you'd be online with them every day with a live account, or sometimes in person with them if you wanted to go spend a week with them in person, trading with them live each day. So it's a short list of people who we work with or learn from one-on-one, either one-on-one at the Traders Expo, personal conversations, online webinar, but always from the point of view of trading with their own real money and not a school. Daniel Gramser, number one. He showed us how to do stop losses. I saw him about 5, 6 years ago in Santa Clara. He was at an E-Trade convention here. And I would talk to him for a while, invited him to some other stuff, a different convention there actually. Saw Daniel, invited him to some other stuff we were doing at a fitness convention in the same building. But we talked and I told him I was doing the stop loss he showed and how well it was working. And he was surprised. He said he didn't think anyone would ever do it because there's so much work involved to get it working initially. The time and effort it takes to make it work is tremendous, but it works really, really well. And myself and Becky, we put in thousands of hours to find out how to do stop losses. And it's the same way we do it to this date. We go through the same process, the exact same way, and it works really well. So anything you've seen with us on stop losses on futures, that was really primarily learned from Daniel Grams of how to approach it and how to determine what the stop should be, how to determine what the first profit targets should be. Some other people, John Carter was foundation level when it came to futures, and Hubert Centers. They both worked together way back when. John Bollinger, the man himself with the Bollinger Bands, learned from him. David Elliott was one of the first people influencing me on how to trade live. He would commit his time each evening to show us, each morning to show us live trades, what's going on in the markets. But he was great for that. Price Headley, back in early on, before a lot of these people became certified analysts and stuff like that, and the legalities changed, they would show us in detail everything. They would show us in detail every setting, everything they do, to a point where it's like, wow, it was, now they can't because of legalities and because they're certified financial advisors and analysts. They can't show us the details anymore. But back then they were showing us everything, and luckily that's when I was learning. Myself and Becky were learning from those people, and all the stuff we learned from all these people is you will see it applied in our strategies and trade management. Woody, Woody's the guy who developed Woody's CCI. We met him at a traders expo. We kept it's like, come on in and see my Woody indicator, my indicator. It's like, go away. It's like eventually we saw Reddit and we saw Woody's and it's like this is pretty good. And we incorporated that into our trading over the years. Oliver Perez, talked about him a couple times in the past. If you see a 40 period moving average on my chart, it came from this because of Oliver. John Person's pivots. We use that a lot of stuff learned from John is actually applied into our was applied in our day trading, especially not as much swing trading, but when we're day trading, stuff learned from John Persons was great. Jake Bernstein, we learned how to maximize profits on winning trades. Once we have a target hit, how do we maximize profits? That was the biggest thing learned from Jake. Plus, we applied some of his strategies also, and then put our own spin on it. Linda Rashke, technical analysis person. She is awesome. She's been around for a long time, and a lot of technical analysis you see now, she came from her, or she's been doing it for a long time. Learn some foundation strategies from her, and you'll see those strategies, kind of stuff you see in our strategies for the futures and for the options. Some of that stuff came from Linda, okay? And it's all built in there. And of course, Steve Nissan for candlesticks. He brought them here, and we've been using candlestick techniques forever. WD Gann, let's go back in time. Gann price and time analysis. We spent a lot of time with Gann. So everyone looks about price, this, price, that, but when you can factor in time into your analysis and trading, it makes a big difference. That's why you'll see on our futures trades, it has to happen within a certain time frame, because if you go beyond a certain time frame, the probability of success changes. Same thing with the options. So Gann price and time combined, learn how to incorporate that type of concepts into our trading also. And one person who gave me a fix for something once, also Traders Expo, when I screwed something up, met him at Traders Expo, and he's like, Ron, idea. He gave me a bailout for a trade gone wrong. And he was like, dude, this is you're lucky this is going to work once in a lifetime, and don't let it ever happen again, type of thing. It was like I made a mistake, and I was like, Ron, how do I fix this? He was an options guy, and he showed me how to use options to fix a problem that I had done. But Ron Ineri was awesome for learning from also. Okay, I'm going to go through this strategy again just for as a quick review, because I know some of you have seen it, some of you have not. I'm going to delete this line. In the handout, I'm going to change the share and then go to strategy really quickly. Let's see, futures. All right. So this is the TNT 52 sell. So you can reference it, two examples of it, and a listing of all the Aussie dollar trades and Euro trades since 2003. Any trades any analysis, any win percentage you see us produce, it usually is data that is now 21 years worth of data compiled to get those percentages. It's not about 1 or 2 years or 1 or 2 months type of thing. This goes back years. Whatever we do has to work over time and during different market conditions. If we have a strategy where in 1 year it wipes out like 5 years worth of profits, then the strategy doesn't work. So all of these strategies which we do are not like that. They work really well, and we have the history to back it up. And since it's all rules based, it's easy to follow and execute and duplicate. But this is all here that you can reference. Let's take a look at one of the trades from this year on Aussie dollar. Take this one. Okay, trigger lines goes up, price touches up a Bollinger Band, a dotted line up a Bollinger Band. It goes up, comes down, and forms a V. Once we see this V form, so
Yeah,
here
the
would
screen
be,
didn't change.
say it again?
Screen didn't change.
Show the, I'm not quite hearing you.
The screen didn't change. We're on the
Oh,
chart.
thank you, thank you. The screen didn't change. And share. Okay, I want a chart now. Okay, thank you. So whenever we see the market going up, we know there's no short trade. We need this to come down. What we're looking for is this trigger line, which is the linear regression, moving average of the linear regression line, to come down and form a V. This day, we have no TNT 52 sell. There's no V, no V, no V, no V. That's all it takes for analysis. That's the analysis. It's like, oh, click, click, click. No V. Oh, next trade. No, next. No V. Next. No V. Next. It takes seconds to go through analysis once you get a routine down. Oh, I have a V. Look at this. So now that I have this V, what I'm looking for is a close below the V. So I have a line here. The previous V, bottom of the previous V, to the current V and extend to the right. What I'm looking for is a close below this line. So it touches, comes down, forms a V. Another day goes by. Hey, the very next day, it closed below. That's my trade signal. If you take a look at the listing I showed before, the one that's in the handouts, it's about an 88%, it's about 88% winning trades when I have this situation. All right. I'm going to be setting up a stop loss above the high of these days. Above, my stop loss will be above this high. My entry will be 10 to 15 ticks below this low. I set up an order with an entry. My target is going to be a percentage of the average true range. The ATR of this day is 66 ticks. If you take a look at the data box right here of that day, 0.0066, 66 ticks. If you're trading micro futures, that's $66 is the average, is the dollar amount. Okay. So it's going to be about 60, about 70 something, $80 something dollars risk per contract when this all said and done. Okay, so about, if I recall correctly, I'm not doing all the calculations now. You can take a look at the last video I sent. Let me put that link back, actually. Links in the handouts. The links is in the chat window. I'm going to send it to everyone. Share to everyone. Okay. You take a look in the chat window. I have the link to the handouts and the YouTube channel. The very last video we did from last month went over the strategy in more detail. And also the P&L, we'll look at that a little bit later also. But this came out to about a 50-something% return. We place an order at the end of this day. We place an order to sell stop, meaning enter the trade when the market drops 10 to 15 ticks, and it has to happen within 2 days. So you place the order to sell whatever number of contracts based upon your risk, and you enter the trade here, stop loss here, and the target's down here. Okay. So once you place the order, there's nothing else for you to do. You go about live your life. The analysis this day is going to take you maybe a half an hour, 40 minutes to analyze everything and place the order.
Yeah, I got a question.
Yeah.
What happens if on that signal day, on the drop day, yeah, that day right there.
Yeah,
What happens if that's a very, very long candle?
doesn't
You
matter.
still follow the same?
The stop is the stop. You're gonna
Okay.
see on the strategy list, or excuse me, the trading plan, some of the stop losses are based on the ATR, and some of the stop losses are based on having the stop loss so many ticks above the high. The only update we've done to that is the greater of the two. So let's say the 10 ticks is right here, but the ATR stop is right here. You're going to use the greater of the two. That might be one of the changes we use, but that's all it is. If it's a long wick, remember you have different stop losses, Van. Some of them is let's say the range of the day was, let's say, okay, this ATR is 66. Let's say the range was 150 because it's a long wick, okay? You have stats based upon the ATR, which might still be 60, but the wick one, that's the 40, 45, and 50% targets. So you can actually have a target that's 40% or 45% or 50% of the long wick day, which would be a much bigger target. And you have the percentages, the win-loss percentage. You have a business decision to make. The ATR target will always be a little bit smaller, which makes it more makeable, right? The other target will be a little bit bigger, so you make more money, but it might have a smaller win-loss percentage, maybe extremely smaller. It's a decision you make in that real time. A lot of people, it's probably 50-50 with people I work with, the ones who choose the bigger target to make more money and those who choose the higher percentage return. I mean, the higher percentage win rate. There's no wrong answer. So if it's a big wick day, you have a choice. You can make more money on a win, or you can go with the smaller dollar amount, but a higher win-loss percentage. And this is the stuff we can go over to when I see you, Van, sometime in the near future, right?
Yes, sir.
All right, cool. So it just keeps going. Now, all this time, there's nothing for you to do. Once you place this order, 2 days later, it gets filled. Entry, target, and stop loss are all in one trade. There's nothing to do but sit there and wait for it. It'll either going to be a full loss or it's going to be a nice win and a nice return on your money. There you go. Cha-ching. This is the day we make our money. You could choose to do the minimum amount of work and just put in one target, so all in, all out, and you make your money and you're out. If you want to do more work to try to get bigger profits, then you put in a trailing stop and you try to catch the bigger move down. That's a choice you make. It depends on your personality, your lifestyle, reality. Do you have time, energy, and effort to manage positions? Or are you going to take your 35, 40, 45% return on your money and walk away? Choice you make. So we provide the stats for all of this. Just because you see this work on Aussie dollar doesn't mean it's going to work on something else. It works on these currencies, but the percentage changes, and it might work. It might be under 80% on British pound. 80% is our threshold. If it's not 80% or higher, we do not trade it. Now let's look at dollars and cents. Does someone pull out a calculator? We can avoid math in our heads. I can sum up how we trade so quickly and easily. All right, and I'll show you a listing in a little bit. But knowing how much we expect to make and if we control our losses, we don't have to worry about getting into that deep financial hole in the first place. This is what messes you up. You're going to know what to do. You're going to know the right thing to do, but then you're going to make a decision that's screws it all up and you look back at it later and regret it. But I can show you how to do it right, how to do it in a very efficient way, and then work with you as much as possible to keep you on the right track. When you make a mistake, let me know. We'll try to fix it. If you screw up something, get out. Just get out. Take a small loss, make it up later on. And never do what we did and let a regular small loss turn into a huge monster loss, because it's hard to like recover from a big losses. It really, really is hard. So it messes with your head, it messes with your bank account, your trading account. It could mess with your relationships, it messes with your personality. You don't feel good about it. It messes with your relationships. If your significant other finds out you just blew out a big chunk of your combined, earnings and stuff, it's bad also. So I know people who have had to deal with that also. So pull out a calculator. If we risk $1,000 a trade, it'll never be exactly 1,000, but 1,000 is going to be, so you get the picture here. $1,000 a trade, and we place 20 trades. $1,000 a trade, and we place 20 trades. If we have 3 losses and 17 wins, what win-loss percentage is that? We place 20 trades, we have 3 losses and 17 wins. What's the win-loss percentage? That's just the number of wins divided by, go with the number of losses.
85.
What's the number?
85.
85.
85. Okay. Why don't we show you the listing a little bit later on? That's the listing of all of our valid trades since in the last 5 years. It's 85%. Okay, what it comes out to. But unlike options, the difference between this and options, with futures, we know exactly how much we're going to make on every winning trade. We know exactly how much we're going to lose on every losing trade. On options, we know how much we're going to lose, but we have absolutely no idea how much we're going to make. No idea. Because nature of options is just a different beast. With the futures at 75% wins, we are net profitable. 75% wins, we are net profitable. At 80%, is our margin of error, so we don't take anything under 80%. We know we're going to make money. The reality is we trade around 85%. Now, anyone with a calculator, 85%, let's say it was 20 trades. We're risking $1,000 per trade. On 3 trades, we lose $1,000. That's minus $3,000. On the low end, and we do everything low end, worst case scenario. On the low end, on the other 17 wins, we only average about a 40% return, low end. The reality, it'll range from 30 to 50 something percent. That's the reality. But on the low end, we only average a 40% return. That's $400. So if 3 times we lose $1,000, that's minus $3,000. And 17 times we make 400, what's the net profit or loss? 3 times we lose 1,000 and 17 times we make 400. How much have we made or lost? Please type it in. Chat window. 3 times 1,000 is a loss. 17 times 400 is the profit. What's the net profit and loss? That's how much you made versus how much you lost. Get some numbers for me. First, what, 17 times 400?
3,800 is our net profit.
Okay, and the dollar sign 3800. net profit. Okay, and $3,000 loss. And what is the 17 times 400?
68.
Okay. This is trading. This is trading. This is trading. A lot of people think trading is just making money. No. Trading is profits and losses, and having a methodology where your net profit should be positive after all is said and done each year. Not every week, not every month, each year. Big picture. The reality is you will have 2 or 3 losing months every year. That'll be negated by 2 or 3 winning months every year. The other 6 months, 6 to 8 months of the year are your profits for the year. But if you don't understand the big picture, you're going to get bogged down with losses, and it'll mess with your head, and you're going to stop trading and you'll second guess it. But you have to keep trading. But if you're trading a method where you have an expectation like this. Got a question? Okay. So this is how we trade. Now, this is also, you'll see on our trading plans, you'll see a number for P&L. That's dollars made to dollars lost. What is 6,800 divided by 3,000? 6,800 divided by 3,000 is what number? Be 2 point what?
22.6.
2.6. P&L is 2.6.
2.26.
2.26. That's $2.26 made for every $1 lost. At the low end, that's what that means. At the low end, that's $2.26 made for every $1 lost. All these are things learned from people who trade their own real money, not from trading schools, because the people who trade their own money showed us very specific things that they're doing, how they're managing positions, how they're actually scaling into positions, scaling out of positions, meaning there are times when you are willing to risk, let's say, $2,000 in one trade, but maybe you only get in $1,000 worth of now and get in another 500 later on, another 500 later on, till you're at max risk of 2,000. So, and how do you get out? So all these things are learned from the people who I mentioned earlier about trading their own real money. And P&L is a huge one. What we found out, once I knew the right questions to ask people, there were some people who were doing presentations and they were showing us their day trading techniques and other trading techniques. And I asked them, okay, and I said, what's your annual expected net P&L? And they said, no one ever asked us stuff like that. I'm like, I know. Now I know what questions to ask. And I never asked those questions during a presentation because I don't want to show up the presenter. I catch them in the hallway. I catch them walking down. I catch them in the restroom. I've had a lot of restroom conversations. I catch them, even Becky will tell you that it was a certain presenter, a female presenter, and I literally waited for her outside the restroom. It was in San Jose, and then I asked her all this stuff. It was actually at a presentation focusing on women. So I went with Becky, and it was literally, I was like one of the only like 2 or 3 guys there, but I wanted to go, so I needed a woman to go with me, so I asked Becky to go. So, but she was saying some really good stuff, but I wanted to get some more information. But I asked her just the right question that she actually featured my question when she went back and started talking about back on stage. But that's what I do. I ask The questions you don't want to ask here, but and when I asked the people off to the side about P&L, a lot of them were in the $1.20 neighborhood. $1.20 made for every dollar lost, because they have a lot more losses, and it only works if you have a really big account. $1.20 made for every dollar lost is huge. It adds, that's a much bigger number. But for most regular folks like us, you need a higher P&L and a higher win-loss percentage. So a combination of the two. Mentally, if we have a lot of losses, it just messes with our psychology. That's why we have the 80% win rate. That's good for us.
Excuse me.
Yeah.
So we shouldn't lose the full $1,000 though on those 3 trades, right? We should have a stop loss that would get us out earlier,
No,
which would
the
also
1,000
create a higher P&L.
no, the $1,000 is your risk. The $1,000 would be a percentage of your account. If you had a $50,000 account, that's only 2% of your account. That's your risk, is $1,000.
Okay.
So you have to establish the percentage risk and stick with it. The reality is, if you have a smaller account, you're going to end up risking a higher percentage. Just get real now. It's just the reality. But it still shouldn't be more than 3 to 4% of the account. In an ideal world, max account risk 2% of the account in an ideal world. But if you're trading just a few things, then you go a little bit higher percentage, which I'll show you in a little bit. But yeah, the $1,000 would represent that percent of the account. That's what you can risk. But it's, so let's go to the trade listing for the last couple of years, and so you can understand digging yourself a hole, or at least a little hole. As far as the strategy goes, TNT 52 sell, like I said, we went through this in the last meetup, so that video is online. Another trade hits the Bollinger Band. This one is in 2012. Hits the Bollinger Band. Okay, this one not a higher. Okay, this one's not, that one's not valid. Bollinger Band not valid. Hits the Bollinger. I'm trying to find one that fills. Okay, here. Okay. See if this one, good one. Nope, would not fill. This one fills. Hits, touches the upper Bollinger Band, forms a V. Look for the previous V. Boom. Boom. Close below either here or here. Sell, stop, collect your money. Like I said, the listing is, and if you're trying to recreate this on your own, play with it. For my coaching clients, I give you everything you need to be able to trade this on your own. So, but this is a setup that happens multiple times per year. Touches up a Bollinger Band. Boom. Second. Okay, that one was in there. No. Yeah. Touches up a Bollinger Band. Closes below. Take a look at this one real quick. Touches open Bollinger Band, close, makes a V. This low is 0.9744, 0.9736. This trade, when you look at it, you think it might be a loss, but no, it would never fill. Because with a sell stop, it never went low enough to get us into the trade. We only go short on markets actually going lower, and we only go long if the market's going higher. So we put an order in to sell stop down here someplace, 10 to 15 ticks below the low, and it never went low enough to fill. So after 2 days, it didn't fill, cancel the order. Next trade, next strategy. Here's one. Oh, up a Bollinger Band, came down, formed a V. Boom. There's the trade. Close below on this day, sell stop, fill within 2 days, get your money, move your stop down, you're out of the trade. But that's kind of what it is. very consistently. It's a very nice winning setup for us. And this is just one of a grouping of strategies. Now let me change the share to index and currency. Some of you have seen this before, but it creates, so this is what you have to understand is the big picture, not just what's happening right away. We use an example of the actual trade dates you see here are all valid trade signals, okay? What I did was I asked Becky to take these trades and normalize them all. What if you are risking $1,000 in every trade? In real life, it would be plus or minus 100 something. In real life, it will never be exactly 1,000. Okay, but it'll be in the neighborhood. It might be 900 something. It might be a little over 1,100. It might be, so it'd be in that neighborhood. But I asked her, what if you risk $1,000 per trade, and what's the percentage return on each trade? Okay, so all these numbers would be a percentage of 1,000. 420 would be 42%. 300 would be 30%. These are all worst case scenarios, not best case scenarios. Anything we show you, we give you a few choices on what you can use for a target and what the percentage probability is of it being reached, and what's the historical profit or loss ratio since 2020, since 2003. So you make a decision and you go with it. This is the beginning of January. This is January 2019. If you were trading these strategies for the very first time this month, you won't be very happy. The month is over and you've just lost money. This is based on a 25 grand account, okay? And it's based, this particular set of numbers is all based on trading nothing else in the account except these strategies and these currencies, okay? If you're trading more things, you may have to allocate a certain percentage of the account, okay? Of what you allocate to trading currencies, what you allocate, but this is assuming nothing but trading the currencies. And this is giving you an idea of what you can do. This could be a 50 grand account. This could be a 5 grand account. It doesn't change. It doesn't matter. Okay. It's percentage return on the account. Always percentage return on the account. This could be $1 million account. Percentage return on the account. All right. So this first month would have kind of sucked. You'd started trading a strategy. You probably want to stop. But this is normal stuff. And usually I see people, this could be someone's hole. They started trading, think they're doing everything right, second guessing themselves. All they know is that they just started trading the strategy in a hole, so they stop. This isn't working. It is working as long as the losses were valid losses that should have taken place. These losses, if you follow the plan, should have taken place, did take place, it's okay. As long as you follow your trade sizing rules, you're good to go. The very next month, made your money back. Once again, you will have 2 to 3 losing months every year, negated by 2 to 3 winning months every year. The other 6 to 8 months will be your profits for the year. Losing month, negated by the winning month. And you keep going. Next month, we're not talking about a lot of trades. Having a lot of trades is what people do when they start out in the trading and they think they have to be sitting in front of a computer all day long, or they're day trading. No, we take quality trades, not a lot of trades. This is what I have a write-up on my website and on the handout. What we show you how to do in 6 to 9 months is what would take you to kind of evolve to in 2 to 4 years or longer. This is what we have evolved to over 20 years almost. Next year will be 20 years. So over almost 20 years is what we've evolved to. We kind of got to this point and we've been here, but this is our evolution. And we don't need a lot of trades. We just take quality trades. Go through each month. April, great. Another, it wasn't a great month, but one thing is this is low end. This is with no trailing stops. Keep in mind, this is the maximum loss. This is not the maximum profit. This is the max loss, not the max profit, not the max profit, not the max profit. This is just the low end, worst case scenario, first profit objective. If you want to trail stops, those can all go higher. We're just showing you worst case scenario. Okay. And we go through the whole year, 2019. We do not trade December. December, there is no reason to trade December. Do not trade December, any of those future strategies. December is when we focus on options, not futures. It's too choppy. It's mostly losses. There's probably 50, 60% losses in December. We do not trade December trades. We just don't do it. Okay. 40% return for the year. Okay. Picture trading $100,000 account. That's $40,000. You're trading $1 million account. That's $400,000. If you're trading a $10,000 account, that is $4,000. This is percent return. Okay. If you want to double your money in the markets, you don't take gambling risks. You follow the plan, but you have expected losses and expected returns. 2020. And this whole year, we only had 1 month basically where we were in a hole. And we're out of the hole within 1 month. Okay. 2020, when COVID hit. Personally, it was my most profitable year of trading. It was literally my most profitable year of trading was 2020. Plus, I had nothing else to do. So I was home. So trading, all my other businesses were shut down. My part-time acting and stunts. No film business work at all for a long time. Teaching fitness classes, a good solid year without any indoor classes. I taught some classes at a park. And all my other stuff was dead for income. But this trading was like on fire. Bad things happening in the world do not negatively impact us. Okay. They actually enhance the markets for our trading. February, March, April, when this is just a great month of trading. Remember I said, once again, 2 to 3 losing months every year, negated by 2 to 3 winning months. So far, we don't even have a losing month for the year of 2020 until October. We had a negative return, totally negated in November. It just takes a couple of quick trades real fast to negate that. So we had 2 losing months in the whole year of 2020. Once again, it was one of those beautiful years of trading. It was my most profitable year of trading since I started trading was in 2020. And this is what we were doing. We worked the same way with options also. It was the same type of returns with options. It was one of those great years. But futures was on fire, especially the currencies. And index futures are also good, but the currency futures, you could trade the currencies just as we showed here and nothing else and make a living. You really can just follow the rules. And I send the trades out every day. So if you're one of my coaching clients, I will send you the trades every afternoon so you can compare them to what you found and then learn how to do the analysis on your own over time. Do that for the first year at no charge every year. So we get that every day. So you can evaluate what we're finding with what you're finding and ask questions, and I will help you fill out the order form, get it correct. We don't want to make any mistakes in placing the order. 21. Once again, monthly percentage returns, all good. Once again, here, this is the max loss. This is not the max profit. This is just the absolute worst case, low end. 26% return, 25%, 35% return. Worst case scenario. But this is the worst possible loss. So we limit our losses, but we don't really limit how much we can make. That's something I fundamentally don't believe in doing. I do not believe in limiting how much money we can make. Once again, learning from all these people I learned from on that list, we cap our losses. They're capped at a percentage of the account. Usually no more than 1 to 4% of the account, depending on what you're trading else in the account. 1 to 4% of the account, and the average is 2%. That's the goal. So you cannot lose more than that on one trade. but there's no limit on how much we can make. So none of these trades is a limit on how much we can make. We can make as much as we can squeeze out of it. Month of trading, you end up break even, basically. So this is a kind of end of month that sucks because all the money you made in the beginning of the month, you gave back in a couple of days. So this kind of, you end of month like, that sucked. But hey, that's the way it is. No problem, made it back up the next month. You don't need a lot of trades. And then we just keep going. End of the year, 59% return. This was 14,009 on a 25 grand account. It would be $29,000 on a 50 grand account. It would be $1,490 on a $10,000 account. Just for the month. I mean, for the year. So it all, just percentage return. Excuse me, it would be a $6,000 dollar amount. Percentage return. This would be a $5,900 on a 10 grand account. 5,900 on a 10 grand account, percentage return. 2022, took a more loss than 2022 for whatever reason, but that's okay. Once again, it still works out the exact same way. You got 2 back-to-back losing months. Now, this is the whole type of hole that people psychologically have trouble with, because they go through a period where they just see losses and they lose confidence. You had a losing month, and then another losing month, and people lose confidence, so then they stop trading, but you have to keep trading. Once again, understanding the 2 to 3 losing months every year, and you can have 2 to 3 losing months back to back to back. You have to understand that big picture. That's why I always have to be in communication with you when I'm a coach, especially when we have losses going on. Let me know if you have losses going on. There shouldn't be losses. And but when we do have known losses, this is what I need you to understand, this big picture, because look how quickly that's negated. 9%, 7%, all of a sudden we took care of that in the next month. In 1 month of trading, we negated all of that. Keep in mind, max loss, not max wins. These are just low end, worst case scenario. Negated that previous loss. As the year goes on, we end 2022, 44% return. This is trading. Once again, wins and losses. When we do futures, we know how much we're going to make. That percentage of 80 to 85% wins. It's just dollars and cents, and it's just numbers. And so we know we're going to make money. With options, we don't know we're going to make. We know we're going to make some money, but we don't know how much. It won't be as much as futures. We do not make as much trading options as we do with futures. With options, you're going to get 10 to 20 something percent return, probably almost every year. You can't, to try to get 40, 50, 60% return with options, don't plan on it. You get a nice return on your money with options, but don't plan on the 40, 50, 60%. You can expect that with the futures. That can be expected as long as you're very consistent. 23, same type of trading, 58% return. Here we are in 24 through the end of March. Right now, we're at 10% for the year. We had 1 loss on the currency futures for the year so far. That's where we're at right now. Very few holes. This is several years of trading. Now you see why we really like currency futures. Index futures are good too, but the currency futures are just spectacular. Okay, we show you both, but our heavy influence on our trading plan is on the currency futures. Go real quick, change the shares to give you a quickie idea of some of the win-loss percentages there. I think I did something with the stats. Let's see if I have it here. Okay. Share, get stats, share. Okay. This is, once again, these are the futures we trade. This is a sampling of some of the win-loss stats, a sampling. We have about 10 strategies which we trade for the currency futures, around 10, and then some for the index futures also. If it's in light blue, it means it's 80% or higher. So we had a couple of these sell signals in the last week or two on the indices. We had one this past week alone that hit on Friday with the trigger extension sell. Actually, it was on Russell futures that hit on Friday. And this was some of the currency futures. So you can see kind of what the numbers are looking like for some of these strategies. Like I said, we have 10 of these strategies, at least 10 total. And then anything we add on to it goes to the coaching clients at no extra charge. So as long as you're one of my coaching clients in that first year, it's all free after that first year. There are some people who choose to subscribe to keep me sending them trade signals every day, or you can do it on your own. So some people can do it on their own, great, have at it. And some people still need some help or prefer to have an extra set of eyes looking at what they're doing, then I'll work with them. And let's see, I'm going to change the share back. That gives you an idea of what kind of percentages. And once again, it's just math. So let's see, changing the share, that's kind of slow here. Okay, exit currency. Okay, do you have any questions on anything we've done so far? I just wanted to get a feel for if you're in a hole financially, you made some mistakes on a trade, you've taken losses. As long as you have a big picture view, keep trading. You may have to dig yourself out of a hole. A lot of people I work with, that's what we got to do, is like keep trading, keep trading, keep trading. Follow the plan, follow the plan, follow the plan. All of a sudden, that hole will be filled in, and you're going to start making money again. Those holes happen a couple times a year, but when you have losses, let me know and make sure the valid loss. If it's not a valid loss and you made a mistake somewhere, we need to know, because futures are unforgiving. They're unforgiving. They can make us a lot of money really fast, or they can lose a lot of money really fast. If you're doing something you think might be wrong, where you feel in your heart you should have been making money, but yet you're losing money, contact me and let's go through it, because but I send out all the valid trades each month and each day. And periodically we send updates. I have the winning trades for the month. And if our list of winning trades don't match your list of winning trades, something's wrong, because we need to figure out what's going on. So that's why I try to work with people one-on-one whenever possible. If you're interested in working with me, like I said, everything I do is one-on-one, normally $1,745, and I work with you for at least 6 to 9 months, but I don't throw you out the door after 6. No, people I've been working with for 10 years now still contact me weekly for help with stuff. I don't charge them any extra or anything like that. It's like, if you need help, just email me. If there's something you want to chat about, something, meet about something, just email me. No, not a problem. So these are all we trade. I like to do a monthly review of your trades to make sure everything you're doing is right and is on plan. Because after it takes at least 3 to 6 months of consistently trading the strategies to see everything's working, because you got to go through those wins and those losses and those losing months, and go through the psychology attached to those losing months and see yourself come out the other side, because you have to really commit to this to see it work. And then it's beautiful. I love trading futures. It works for me. It works for Becky. We both trade options also, but futures is our bread and butter. This is what I can count on. I know that literally on Friday, I transferred money from my futures account to my corporate account to me. It's just it's all business. I do everything from a corporate account. So everything's business, but I have bills to pay this month. So money I made from trading the index futures over the last couple of weeks as the market was going down, book profit index futures and currency futures. That money is actually paying my mortgage this month. Okay, it's paying my HOA fees this month. So that's what I actually use the money from trading to pay my bills. So that's the beautiful part of trading. The money is there and you don't have to work for someone else. This is something I really wanted to do a long time ago when I was at work. I worked as an engineer at Lockheed, and I would tell the people I'm working with that all these things I wanted to do in life, like acting, stunts, there were jobs that came up, acting jobs that came up. There was one time I got a call, wanted to know if I can double Eddie Murphy for 2 weeks. His regular double was out, was unavailable, and he was filming locally here in the Bay Area, and needed someone to double him for 2 weeks. And I went and talked to my manager at Lockheed. I said, can I take 2 weeks off? He's like, no, not 2 weeks. He knows I'm an actor. He knows I do this stuff, but you can't take just 2 weeks off because they have deadlines there. And when you're working on a set, you're there. You're there from morning till night. It's 12, 14-hour days. So once you commit for 2 weeks, you're there for 2 weeks. Pays really good, and it would have been a great thing to put on my resume, double Eddie Murphy. But that's the type of stuff I wanted to be able to do. And that's what trading allowed me to do, to be able to get flexibility so that I'm not locked into a 40-hour week job anymore. I don't have to be in a cubicle. I don't have to report to anyone. I report to me. I teach fitness classes each week. I have a very flexible, that's stuff I like doing. If I wasn't teaching a fitness class, I'd be in a fitness class. I train in jiu-jitsu at least 5 days a week. I have my government duties. So this Tuesday evening, I have a commission meeting, Parks and Recreation Commission in Santa Clara. Always putting in, I have to do this research study thing that's coming up also this coming week. And also trading pays for my dental. I got a couple of implants done in the last couple of years. Trading pays for my implants because it's medical reimbursement for my corporation. So that income from my trading actually is deductible and everything. It's an expense. So there are a lot of business advantages also to having trading as a business in an LLC type structure with a corporation managing it. So from a total business point of view, great tax deductions that I could normally not be able to take trading as an individual. That's a whole different story type of thing also. But if you're interested in working with me, please give me a call. My information is on the handout. For anyone wanting to work with me, let me know before Wednesday. I will take $250 off this price for this week, but you have to let me know by Wednesday. Let me know by Wednesday. I will take $250 off this price of $17.45. Okay, but let me know by Wednesday. And if you want to do futures and options, I will take $500 off of this price. $500 off this price if you let me know by Wednesday to combine options and futures, or $250 off this price for futures alone, and it's going to be at least 10 strategies. Nope, there's no payment plan. I have to give you all the knowledge, so I can't give you partial knowledge and have you be able to do this. So this is, you have to be, once you're ready to commit, it's just we go. I have some people who have paid me and then they realize they have other financial issues they have to deal with, and can't work with me right now. And I'm like, okay, let me know when you're ready. And it might be 2 months later, they get back to me. Okay, I've dealt with all my financial issues. Can we start again? Yeah, no problem. I said, this 6 to 9 months thing, I don't lock anyone into that 6 to 9 or 3 to 6 months. I don't lock anyone into that. A year from now, if you need help a year from now, I'm there. If it takes some people, I talk to literally once or twice and never hear from them again. Hear from them like 3 years later, they're like, yeah, we're doing great. Okay, great. Some people I talk to almost every week. So everyone's different. And I'll always do one-on-one. I don't do groups. The reality is that I might have to say something to you 3 different ways for you to actually understand it. Because how I say it one way, someone else might get it, but someone else might not, because of their knowledge base and background is different than someone else's knowledge base and background. So I have to adapt whatever I say to the individual so they get it. This stuff is way too profitable to screw up by not getting something. So I want to make sure that everyone understands it, and I verify it that they're doing it right. Send me screenshots, or let me take a look at your platform, your order platform. Send me screenshots of your orders. Has to be right. We don't want to screw things up with the wrong orders. The currency futures are awesome because you can trade small. You can risk a little as $100 something on a trade to learn. So, and there's no limit on the high end. And it's literally just the same type of thing I showed you with drawing that line, the trend line. Our strategies have 3 approaches. One of them is the market goes up, it comes down, goes up, and makes another swing down. It goes up, and makes another down below that previous. So it goes up, creates a swing low, and the next time the market goes below that low, that's going to be our trade short. Opposite for it going long. Another method we use is the market is in an uptrend. Within that uptrend on a lower time frame, same daily chart, but we can do lower time frame on a daily chart, like with different settings. And so market's going up, but on a lower time frame it pulls back and then snaps back up into the bigger trend. That's another method we use with different indicators, so everything is repeatable. 10 different people looking at the same chart will see the exact same thing. Don't believe in that type of subjective things. Well, the double top, double bottom. Yeah, but what if I look at it this way? Oh, well, look at anything that's subjective, we don't do it. This has to be very exact, very repeatable, just the way I showed you, so that I can plan out my business, I can plan my income, so I can make a living, so I know I can pay my bills this year, so I know I can pay my rent or my mortgage in my case. But I know a lot of people have the same type of situation. You don't really want to be in your cubicle forever, and you want to be able to walk away with your own and be financially independent. But this is how I found it works for me really, really well. And if you need help with this type of thing, please call or email me. Let's see, I'm going to change the share. Some of you have not been on my website before. All right. This is my homepage here. Pull that up. My homepage, a little bit of bio about me. A couple months back, I did a podcast where I was interviewed. I didn't know what they were going to, I had no idea what they were going to ask me. For all I knew, it could have been an ambush interview. I had no idea. So I just went with it, and they asked me whatever they asked me, and I answered it, and it's about me and my trading and background and everything else. So it's a good one to check out more about me and some of my likes and dislikes. A few links here with videos also. And I put in a chat window. I'll put it there again. The YouTube channel is a good one to go to all the previous, many of the previous presentations I've done are there. So you can see some stuff that's familiar, but the brunt of the strategies is the meat and potatoes of everything. Those are saved for, I normally show you one general strategy, but the details are held back for the coaching clients. So my paid coaching clients get all the details, they get all the updates periodically. As we evolve strategies, because we're always looking for ways to make things more profitable, and we do. Anyone who's a coaching client will get those also over that first year. After that, some people are paying a little bit each month, and I keep sending them trade signals and updates. But at first year, everything, you're going to get it. I want to make sure you got it down. Constant contact with me. Let's make it work that first year. All those people I mentioned earlier, I've talked to personally, in person. They've all helped me personally. I can go up to them and actually talk to them and be like, can you help me with this? What about this? You call them, they actually will talk to the real people. So things may have changed over time, but a lot of them are still very available to you, like Daniel Grabser. The real people will actually have a conversation with you. And that was my best way to learn, and people helping me. Sometimes there's a fee, but that's okay. And I believe in the same thing. You gotta talk to people who actually trade their own real money, because it's a different approach to trading than people who just have a trading school. That's one to sign up for a class. So anything I show you, I want you to understand it and be able to do it on your own. I'm not going to sell you trade signals. You better be able to know the trade signals yourself, how to get them, how to do your own analysis. I'll still send it to you each afternoon, but it's up to you to verify them. So you need to actually understand what you're doing, and I make sure you understand what you're doing so that eventually you can be on your own and fly, not be dependent on me. That's what I want you to be, independent trader, and then you help others and let it all keep propagating. All right, do we have any questions? We'll probably do our next meetup in maybe 2 or 3 weeks. It might be on options, might be on futures, depending on what feedback I get or what people want. If you're interested in working with me on the coaching and the strategies, please let me know before Wednesday, and that's the $250 off, or the $500 off if you're doing both options and futures, and we'll get it going right away. The trading platform, the analysis platform I'm using is NinjaTrader. For the analysis platform, it's free. It's a very good platform, easy to use, and it's free. You can place your trades on whichever platform you use for futures, but for the analysis, we use NT7 or 8. All right, if you don't have any questions, I'm going to wrap it up for today, and then we'll see y'all back in another 2 or 3 weeks for either options or futures. All right, y'all have a good day then.